Is California becoming uninsurable? Insurance companies don't agree, but many Californians are losing their insurance or their costs are going significantly higher.
California is acting irresponsibly. We don't have a good marketplace, so they're saying we have to get out of the areas that aren't mitigated, that maybe high-value homes that are going to cost the most. We have to save our business.
Our guest today is Stacy Korsgaden, who's an insurance expert with decades of experience in the field. She believes the root cause of all the problems with insurance in California is due to a proposition passed a few decades ago. I'm Tiamai Korami. Welcome to California Insider. Stacy, it's great to have you on. Welcome.
It's a pleasure to be here.
We want to talk to you about insurance. You're an insurance agent in California. You've been in this space for a long time, and now there's a crisis, unfortunately, with insurance. Can you tell us what's happening from your perspective?
Yes. As an agent for 35 years, I've seen the markets change. Markets have been good, markets have been bad. I've never seen a market like this where an individual family is having difficulty finding fire insurance, home insurance. And there's many reasons for that problem, but what has happened, a culmination of years, of decades of bad policy, has led us to this place. And what's happened is in 1988, Prop 103 was narrowly voted in by Californians, and it was a proposition. It became important to the people of California because rates, especially auto rates, were skyrocketing. So the public was looking for a solution, and that solution, there were several measures on the ballot that year. Prop 103 was the one that was voted in. What it did was Prop 103 said, number one, that the public wanted to elect the insurance commissioner of California. Number two, they said that if insurance rates or insurance companies were going to raise rates over 6.9%, that there needed to be a public hearing. There also needed to be some kind of controls on how insurance companies determine their rates. What I tell people is in 1988, Californians were at a fork in the road. And the fork in the road said, are we going to continue with a capitalistic market determination of insurance premiums, or are we going to go the other route, which will be more government controls, government entry into a capitalistic marketplace? And we decided it was a situation where Californians decided to take the fork of the road, and I'll say it what I believe it is. It's really a form of socialism. It's where government can have a very, very big impact on what a private business decides to charge and how to rate.
So this proposition, so the state we went more towards socialism because we didn't trust the insurance companies, right? This is because they were raising the rates.
Why did Californians decide to take on Prop 103? Well, first of all, in the proposition was a feature that said that the insurance companies were going to have to roll back rate. They're going to have to pull back rate about 20%. I think that was the number. So that was attractive because insurance premiums at the time were jumping. They were increasing, and families were having a hard time. So that was a good sales point on Prop 103. I was just entering the marketplace. I was just becoming an insurance agent in 1989. So it took a while for Prop 103 to work its way through the marketplace. Insurance companies were legally trying to fight the fact that whether or not it was even legal. So it did become law. It was implemented in the early 90s, right when I was starting to become, really active in the local community as an insurance agent building my business. One of the things that I've seen is through the years, we see that the community, the state, the population, they don't trust the insurance system as a whole. We have to ask ourselves why. Personally, my personal story is, and it's one of my favorite topics, is to talk insurance because it is a miracle system. The first insurance company, the first fire insurance company, was actually started by Ben Franklin in Philadelphia. It's called the Contribution Ship. It's hard to say, but that company is actually still in business. And Ben Franklin saw a problem. In Philadelphia, they were building homes close together. They were wood structure. They were building fires in fireplaces that probably weren't built correctly. And so if there was a fire, it could burn down a whole neighborhood. So Ben Franklin, what a guy. He organized community fire departments. He helped develop building codes. He implemented an insurance company, and he also said it was a good business model that we would combine resources, people could pay into the system, and if their home burnt to the ground, that there would be money available to rebuild a home. It was a beautiful system, and it's still a great system.
Stacy, you mentioned that this proposition passed about almost 35 years ago.
Right.
Is what's happening today related to this proposition?
Absolutely. It's government regulation. Let's say the intentions were good, that prices were out of control. What we have now is the government has overstepped its bounds. California insurance, the most important element of the insurance policy, it's the client. Why we exist is the client. They're at the top. They're the pinnacle. There's 5 things that support the client, and it's the insurance company, it's the Department of Insurance, it's government, it's the private sector, and I believe the last pillar is California philosophy. And I think that's probably right now probably one of the most important pillars. But when we look at how each one of those pillars is attempting to serve the client, all of those pillars are stressed, broken, they're not functioning well. And so the outcome is the insurance companies are saying, this is a market that's so dysfunctional, we have to control our risk. We have to control our losses. We know what's on the horizon because the government has said we cannot price properly. We cannot model properly. We cannot function properly as an insurance company, so we need to pull back. We're not going to write new policies, and we're actually going to get off risk. All of that is not serving the customers, not servicing the client.
Some of you may be wondering, why are we talking about Shenyun on California Insider? It's a dance about China, but ancient China. I'm a big fan of Shenyun. I've been to it 14 times. Every year I go. The first time I went to Shenyun, it was so amazing. It was so uplifting. The colors, the energy, they put you into scenes of thousands of years ago. And you feel like how the ancient people lived. And you get to appreciate the history of humanity. There's a lot more to this show. It's going to be here in Southern California, and I want to make sure you guys go see it. You don't want to miss this show. You have to see it at least once. And make sure to tell us what you think afterwards.
It was spectacular, so beautiful.
I thought I was going to heaven.
Oh, it was electric.
I'm getting chills talking about it.
It gets a 10 from me, that's for sure.
It was that good.
Absolutely marvelous.
Hands down the best show I've ever seen.
So based on what you're saying, essentially, insurance companies are regulated. They can't raise their price. And then they decided, if you don't let me raise my price, let me actually not renew some policies because I don't want to deal with the risk. Is this what's happening right now?
You're spot on. To clarify, what the law says is before the end of this last year, before the end of 2024, which we'll talk about because there's some regulation changes that are on the horizon that should help the situation. Prop 103 said that if an insurance company needed or wanted to increase rates over 6.9%, it needed to go through the Department of Insurance and go through a public hearing. The public hearing was designed and written to go through in 60 days. Well, guess what? That's not how it's been working. Sometimes it's taken over a year. And if the insurance companies are experiencing, like you and I are experiencing, inflation, and to repair a cost, the repair costs have gone up. You need to have rate quickly. Well, a year's not going to do it. Or if you see that mitigation is not occurring, that we've had a really wet season and then a dry season, and the California, we are not taking care of the brush, basically mitigating the risk in our community, the insurance companies are saying, why would I want to do business here? California is not taking care of crime. That's an insurable loss. California is not taking care of our homelessness. What happens with our homelessness is all tied with insurance, increased crime. When insurance companies are seeing that mitigation isn't taking place. In the north, we don't have forest management. We don't have a timber industry anymore. We aren't seeing that the pine beetle that is in the Sierras. Right before the creek fire, there were millions and millions of dead trees caused by the pine beetle. The creek fire, it was a terribly hot, destructive fire. And the insurance companies can see the writing on the wall. They can see the writing on the wall. They do not want to lead into covering these risks where the government is not only controlling the price, but they aren't controlling the risk. That's a devastation waiting to happen for any business. And when I talk to families, I tell a family, you're really a miniature insurance company. They won't really understand. And I'll say, okay, you have a family, you have a young driver, you have a boy, let's say. He's 16 years old. He's ready to drive, he got his license, and he's going to get a car. The family makes an economic decision, and they say, you're going to have the ability to drive a 2010 Honda, okay? We're going to give that Honda to you. You're going to learn how to drive responsibly, but it's a big deal because if you're involved in an accident, you could wipe out everything that we have. And what the family, how they behave as an insurance company, they'll say, okay, on that car, we're not going to put comp and collision on it, but we're going to put good liability limits. So the family says, this is the risk that we're willing to take. And beyond that, we're going to mitigate our risk and we're going to have an insurance policy to cover the larger risk. Everything goes well. So the boy gets behind the wheel. He's very responsible. He gets good grades. He's getting discounts for that. Everything's looking good. No claims. There's rewards for that. The family says, okay, you can continue driving. You're doing a good job. But let's say option B happens. The young boy is not a good driver. He's irresponsible. He's not getting good grades. He was told not to have his friends in the car. And you find that he's driving recklessly. What are you as a parent going to do? Well, some parents might ignore the situation and take a chance. Some parents might yank the keys from the child and say, you're irresponsible. You're risking our fortune. You're risking our future. So for families to really trust the insurance industry, they need to realize that they're really a miniature insurance company. They're mitigating their risk. They're mitigating how much risk are they willing to put on the table. For a home, it might be a $5,000 deductible. For some, it might be a $10,000 deductible. The insurance companies are doing the same thing. They're looking around and they're saying, okay, what do we have to risk here? We have a state that's not taking care of the forest. They aren't making sure that there's water available above the Pacific Palisades. We have government officials that aren't preparing to take care of the homes in the event of a wind event right before they might even maybe leave the country. It's very maddening. I feel for the people of the Palisades. So the insurance companies are saying, do we have serious leaders here? And they're saying no. So it's serious right now. The insurance companies have a duty to make a profit, to put money in reserves to pay for claims. They are being put in a position where they can't collect enough premium and where they have a situation where risk is not mitigated.
So essentially risk, in a sense, some of this risk is coming from government activities in California.
Absolutely. We have a government right now that is, in my opinion, irresponsible and really not serious. And let me give you an example. A month after the Palisades fire, our governor had a decree, had an executive order, whatever he called it, that said we need to prepare our land for wildfire prevention. I would have liked to have seen all hands on deck years ago. Let me give you an example what's working and what I believe government can implement and spread throughout the 58 counties. It's called the Fire Safe County. And I would like to see the governor, the Department of Insurance look at what's happening in a successful Fire Safe Council. This is where mitigation can occur at the local level. And in San Luis Obispo County, we have a Fire Safe Council, which I'm a part of. And it's represented by the local government, which is a local supervisor. We have an executive director, which is an independent contractor, so we don't have pensions at the county level. And the executive director has brought together interested parties, so CAL FIRE, local fire department chiefs, insurance representatives, local people in our community. We have 7 cities in our county, but we also have an unincorporated area. We're representative of California. We have areas that are potentially problematic, a lot of fire brush, a lot of concerned areas. What the Fire Council does is we take information from interested parties and they'll say, this part of the county, there's a problem here. And so they'll draw up and get grants. So grants will come from the state to the counties and we will have a project. That project will be resolved by all sorts of treatment. It'll be treated by goats. We have a really interesting group of business owners that have animals that will go into really hard areas and they'll
just eat.
They'll eat the wildlife. We'll have prescribed fires. We'll have hand crews. We have people. We have a company that comes from out of the country that will cut trees. They're very efficient, cost effective. We will have we'll have people from our local tribes that will help us with burns. There are different ways that we can mitigate on a local level. We can keep costs down. We know our local area. That's 1 out of 58 counties that I feel we've done a very good job. The area in Los Angeles had a Fire Safe Council. I don't know their situation, but I would say my question as an insurance agent was why weren't the fire hydrants working? I'm not a fire expert, not a water expert, but why wasn't the water reserve above Pacific Palisades filled? That's something that can be managed.
What you guys are doing in your county, would that actually lower the insurance rates for you? Do the insurance companies look at that and say, this county is more responsible than other counties so that the rates can be lower in this area?
We used to. We used to. Now the insurance companies are looking at it's too big. The problem is too large at this point. It's a state issue.
So they say, it doesn't matter, you guys are doing a good job. There's 57 other counties, and if they have a fire, we have to use your funds to pay for them too.
It's all related.
Is that how they're looking?
It is. I think that's a great question. We used to have a situation where we would look at protection class. Okay, let's say we looked at my community. I live in a small community, but most of the people live 1 to 2 miles away from a fire department or a police department. Those people are going to get really good rates. But then as we go out of town, there are people that live in areas that are farther away, and that if there was a fire, it would take longer for a fire department to get there. We would expect those people to have higher rates. But now we're in a situation where the house that lives 1 block from the fire department is having a hard time getting a policy. Why is that? It's because things have the business model has deteriorated over the years, and here we are. Here we are in a situation where it's one of my least favorite words. It's not sustainable. You know, what is sustainable? The insurance companies, it's a profit business. It has to make a profit, and then it has to set reserves. So in the event there's a claim, it has money to pay those claims, and the companies are in trouble.
So Stacy, based on what you're saying, essentially the government, the California's government role should be to lower the risk for the insurance companies. Instead, they're really focusing on lowering the premiums. But if they lower the risk, they could actually lower the premiums.
Beautifully said. That's my philosophy. And, you know, we get back to what is the most important element of this whole system, and it's the client. What holds up the system is the insurance company, the government, the Department of Insurance, private enterprise, and last is the philosophy of California. The reason I keep bringing up those pillars is the pillars have tried to cross-pollinate, and the government's tried to get into the insurance business, and the government has tried to get into private enterprise, and really it has done a disservice, and the pillars have become weak.
Now, in terms of when we heard that insurance companies are just letting customers go, you know, they don't want the customers. You're an agent, right?
Yes.
And you work hard to get this kind of customers, right? What does it look like?
Well, when the insurance company has to cut back, it's devastating. It's really devastating for the insurance company, and it's devastating for the agent that might know some of these clients for decades. We've seen the families grow up and have kids, and the kids have gone to college. They really become a part of the fabric of the business. The insurance company actually does not want to do this. They don't want to do it. The agents don't want to see this happen. But remember the story where you're the parent and the kid is acting irresponsibly, where your whole livelihood is possibly being sacrificed. You're going to yank the kid's keys out of his hands and you say, you're not going to drive. That's what's happening. California is acting irresponsibly. So we don't have a good marketplace. So they're saying we have to get out of the areas that aren't mitigated, that maybe high value homes that are going to cost the most. We have to save our business, and that's how they're doing it.
Do they tell you guys that they're about to, like some of your policyholders are, maybe they will get canceled? Do they give you heads up?
Not really. Not really. I'm
so
sure
the letters goes out to the customers, and then the customers will come to you guys.
Well, the decisions I'm sure are made in the boardroom, and then it's broadcast out through the company, and eventually we know. Most of the time when we get notification, we have the ability to notify our customers before they get the envelope in the mail. Let's say there's a cancellation. A lot of your viewers might wonder, well, what am I going to do? First of all, when people get the insurance envelope, the first question is, oh my gosh, I wonder what's happening to my insurance rates. Are they going to go up? And the answer is yes. They are going to go up, and we can go into that. But number two, the worst envelope that you open is that your insurance has been canceled. Then what do? Many insurance companies or agencies are brokers, and the first line is to see if there's other insurance carriers that will insure your home. And oftentimes the answer is yes. If the answer is no, then there is a safety net. It's called the FAIR Plan. And the FAIR Plan is the policy of last resort. And that is something that is available for everybody. But that whole system is currently, and it's a nightmare. When I first started my insurance business, I had policies, it was just maybe 5 or 10 policies in the FAIR Plan. Now, it is the policy to write. If a customer comes through the door, the policy is the FAIR Plan in most instances right now. So when I was an agent, it was probably throughout the state had 150,000 policies. And in the last year and a half, they've been writing 27,000 policies a month through the state of California. That's alarming because the FAIR Plan, it's not a government plan. A lot of people think it is, but it's actually a private insurance company that the insurance carriers have to participate in. So let's say you are one of those customers that got a cancellation from a regular and admitted carrier, then they received a policy through the FAIR Plan. So let's say a company canceled that policy and they end up on the FAIR Plan, and then there's a catastrophic loss, and the FAIR Plan, which did go bankrupt, not really bankrupt, but they ran out of money. The Department of Insurance said there's going to be assessment of $1 billion. That was approved. Who pays that $1 billion? It's the very company that canceled you in the first place. So if a company has 10% market share, they're going to pay 10% of that $1 billion. And with the new regulation, that 50% of that responsibility will then go to the consumer.
So a lot of the insurance holders, consumers, are going to have to pay.
Yes. So it all comes back down to we need a healthy system. Because ultimately, the person that we care about the most, the client, the customer, ultimately is going to pay without a healthy system.
So what is a healthy system? Is it to allow the insurance companies to raise their rates to whatever they want? Is that, I don't think a lot of Californians want that, but.
Well, let's go back to that fifth pillar that I talk about, and it's the California philosophy. What kind of state are we going to be? Are we going to be a state that simply relies on the government for all solutions, or are we going to turn back the clock? And are we going to look at the road that we took, and are we going to be more free market solutions? So what is a healthy insurance market? It's very clear to me that what's been going on in California, which has been overregulation, it's simply not working. It's taken a while for the evidence to appear. Here we are in 2025. The law was in place in 1988, and here we are in 2025. The law's not working. So what is a healthy marketplace? A healthy marketplace is where we have as many insurance companies wanting to enter the market and to compete for your policy. So if we have a system where it's free market, an insurance company can say, we're looking at the models, and we think that where your house is, you're not going to have a theft claim in 100 years. You aren't going to have a fire claim in, 100 years. This is what your rate is. And we have many, many companies doing the same thing, but looking at the risk differently. We're going to have policies. We're going to have a variety of policies. We're going to have a variety of companies competing for your business. So free market. So if all of a sudden my insurance company decided to raise their rates 10%, I want to be able to say, I don't like that. I want to shop. I want to shop, and I want to look maybe 3 5 different companies to see if I can get a better policy, if I can get a better rate. I want to be able to compete and change companies if I can. But right now, my concern is, even with the current regulations, and there's going to be some changes, I'm still concerned that there won't be innovation and there won't be re-entry into the market. And I want to see new companies. I want to see innovation. I want to see all those things into our marketplace. It's not happening.
So right now, if somebody says, if an insurance company comes and says, I want to raise your rate by 10%, people are happy to take that.
Absolutely.
As long as they're not getting canceled.
Right.
So the ideal situation is if we have a lot of companies wanting to insure California, so that when the 10% raise comes, you can go and look around and see if there's other options.
Beautifully said. Absolutely. And is that the case right now? No. Capital follows and looks for opportunity. And right now, there is limited opportunity for insurance capital in the state of California.
Do you think Proposition 103 needs to do we have to go back and change this proposition?
Yes, I do. And
Do you think that's the only solution?
I think it's a primary solution right now. But what's happening right now is there are some changes that are on the table called the Sustainable Insurance Strategy. And the Department of Insurance has listened to industry leaders, and they're looking at making some changes. And some of those big changes are catastrophic modeling. Prop 103 beforehand said that we had to look at modeling in the past to determine our rate. And now we can look at future modeling and say, well, based on the probability of the fuel and et cetera, this is what, or the length of time we feel it will take to have some type of an event, and they can rate for that. So simply put, we can future model and put that in the rate. That's a good thing. The second is we have a thing called reinsurance. It's insurance for insurance companies. And insurance companies were not able to put that into the rate, a rating factor. In the future, that will be something that insurance companies will be able to expense. And that's a good thing because it's an expense that the reinsurance, if we want reinsurance to come into the marketplace to handle the larger losses, and those are not regulated. It's a free market there. But we also need them to enter the market because that is a stability or stabilizing factor for insurance. So we'll be able to expense that. But what is upsetting to me as an agent and a consumer is when I heard our current insurance commissioner during this committee in the last couple weeks with the Assembly in California talk about the sustainable insurance strategy. I, as a consumer, thought that the goal was met, that these regulations were completed at the end of 2024. Well, I'm found out that those regulations actually aren't completed. And the insurance companies cannot ask for a rate until those regulations are completed. So here we are again, waiting for our California government and the Department of Insurance to react. And while the insurance companies, we're looking for the market to open up, we cannot move until those regulations are completed.
Now, Stacy, what is it like for you on the ground, and you're seeing this situation with insurance? You've put your whole career in the insurance space, and what is it like for you?
Well, people laugh when I say, I love insurance. I do love insurance because I see what insurance does for people when they need it the most. And so you ask, what is it like? It's aggravating, it's maddening. It's a little bit scary. And when I say that, I was talking to a customer this weekend, and I always ask, how's your insurance going? Because I sold my agency about 2 years ago, but I'm an advocate for insurance, and I go around and I speak, and I also listen to people what's going on, and people are frightened. And this is a system that's put in place to offer security, to give you peace of mind. But when the system itself is under so much stress to the point of breaking, which it's broken right now, it concerns me. It concerns me for my customers, and this is all fixable. This insurance issue is so fixable. It's so easy for me to see. It's aggravating as a person that cares so much about insurance that decisions are not being made or being made in such a way that it's literally choking the insurance industry itself.
Now you say you love insurance. Why?
When I was growing up, we had a family, 5 kids in my family, and mother and father moved to Visalia. 30 days before my father passed away, he bought a life insurance policy from a local insurance agent. His name is, he's infamous in our family. He's kind of a hero because he was a local businessman. He covered our home, he covered our autos, and he asked my father, "You have 5 kids. Would you like an insurance policy?" And my father said yes. So when my father passed away in a car accident 30 days later, accident that was unexpected, my mom was able to stay home. It did what an insurance policy was expected to do. My mom was able to stay home, go through a terrible readjustment period, take care of her kids, and she was able to stay home until we were in school and we were stable. The insurance comes into play when a family needs it the most. The insurance company was a hero, in my opinion. The agent was a hero because it changed 5 kids. It gave us opportunity. So when people talk poorly about insurance, I understand that there are problems and people don't like paying for something that hopefully they're never going to use. I tell people, you're going to pay this premium, but pray that you'll never have to use it. But I've talked to hundreds and hundreds of people in terrible situations when they came to me and they said, "Thank you for insuring us properly." They were good stories. That's what an insurance policy is supposed to do. That's why I love insurance.
So what about the governmental risk? You're the first person that has brought this up out of all the insurance experts we've talked to, that when the reaction to a disaster is not fast enough, or if there's vegetations and the risk goes up, how much of resources go into assessing this inside insurance companies? Is there an element that they look at a state or a county or a city and they will look and say, this city is not well prepared, they don't have that many fire stations, and they have a lot of vegetation? How much of that is possible for California to mitigate?
That's a great question. Let me bring it down to the community level. I, as an agent, you come to me and you want me to insure your home. I'm going to quote it, give you a rate, bind it by getting a signature and some money. Before I do that, I need to go by and I need to inspect your home. You tell me what the home looks like, but I have to do my due diligence and I need to go and inspect the home. Well, when I drive by, it's beautiful. So I know I have a good risk for the company. But I can't count the number of times where I've been surprised as an agent. I'll drive by, have to take pictures. I'll see that the paint is in disrepair. I'll see that the lawn is not well maintained. Maybe there's an old refrigerator out on the front lawn. It's not well maintained. I cannot insure that home. I have to decline that policy because the homeowner is going to increase the liability. They're showing that they're not responsible and it's a potential claim. Let's translate that to the state of California. How are we doing on crime prevention? How are we doing on homelessness? How are we doing on fuel reduction?
Like the brushes and those things, the trees.
A lot of brush, a lot of forest issues. You know, we used to have a timber industry, and because of environmental influences, we have diminished our timber industry by 2/3. Well, is there a way that we can develop the timber industry? This is just one idea. where we can minimize and create a situation where our forests are healthier, where the pine beetle would not have maybe taken hold in our sierras. We have to ask ourselves, are we taking care of our fuel? Which is in the south, a lot of it is the brushy areas, and in the north, it's a lot of the forest. So how is our state doing? Everyone in California, how are we going to grade our maintenance of our house in California? And if you give California below a C, the insurance companies are evaluating California the exact same way, as they should, because if they've made a commitment, a promise to insure your home, we want to make sure that they have the money to pay any claim that you might have. So they have to look at all of California to make sure that California is maintaining their property.
Stacy Korsgaden, California insurance expert. It was great to have you on California Insider.
What a pleasure to meet you and to speak with you and your audience.
Do you agree with Stacy on her comments with the insurance crisis in California? Is the root cause of all of this a proposition that passed a few decades ago? Make sure to tell us what you think. You can always comment or send us an email at siamak@californiainsider.com. Remember, we read all of your comments and emails. And this is Siamak Khorrami with California Insider. We'll see you next time.